All right, let's now turn to that little forgotten company, Apple, that we have been watching here this morning after that company came out with its earnings. First $100 billion quarter, that was widely anticipated with sales up 21%. iPhone sales in particular up 17%, which was an improvement in terms of its momentum. The shares, though, are down 0.8% this morning, and the company did as it has been for most of 2020, didn't come out with a forecast. So that could be partially responsible for what's going on with the shares. Tom Forte's with us now, D.A. Davidson, senior research analyst. He covers Apple, of course. So, Tom, what do you make of the action here this morning? The declines have abated a little bit for Apple, but, you know, it's tricky with Apple because expectations tend to be pretty lofty.
So the short analysis would be that expectations were very high going into the quarter. And despite the fact that the December quarter sales and profits were nothing short of amazing, and to your point, management didn't give too many details on what it expected for the March quarter, though they did say an acceleration in revenue growth versus the December quarter. So sales in the March quarter will grow faster than they did in the December quarter. But I would attribute the slight weakness in shares today to just the high expectations going into the quarter. I saw this with Logitech. They reported an amazing December quarter, gave positive comments in the March quarter, and that stock had a slight pullback afterward.
Tom, you think investors are too optimistic on the uptake for 5G iPhones?
Actually, I think that this is more, seems to me to be like a pause than an indication of excess optimism. Because what's interesting about the December quarter and the March quarter is that the real big iPhone sales should come in the March quarter, not the December quarter. So what really drove the December quarter wasn't just the iPhone, but it was the whole portfolio of products and services. So I really think that the good news for Apple shareholders is if you go back to December 2018, when they pre-announced weak results due to softness in iPhone sales in China, that really motivated the company to diversify their portfolio from a hardware and software and services standpoint. And now we're starting to see the benefits of that. It's strengthened iPhone and strengthened the remainder of the portfolio. And that's very powerful.
What about the China business? It was a good quarter in the most recent quarter for Apple, but again, I think that it's more of a hardware story than it might be a services story there. But what do you make of that part of the business that has gotten so much focus over the last couple of years as maybe not the growth driver it had seemed, in the mid 2010s?
On a one-quarter basis, I think the number was 57% sales growth. It's an amazing quarter in China. And I think China gives us maybe a purview to what sales could look like rest of world when the build out of 5G rest of world is more at parity with China. So I agree with your assertion that what's happened over the last couple of years is they've had slowing sales growth in China. But for the December quarter, it was very strong performance.
Hey, Tom, this speaks to the issue of competition. And speaking of competition, I want to just bring up Facebook quickly, who said fourth quarter sales were up 33%, 2.8 billion monthly active users, 3.3 billion across all the platforms. Mark Zuckerberg talked about the competitive risk from a change that Apple is making in particular, that it's the rolling out a new feature. So if you have an iPhone, you will be able to opt in or out of ad tracking, which Facebook has said is going to be problematic. Is this a good thing for Apple, first of all? And is it conversely going to be a bad thing for companies like Facebook, as Zuckerberg is anticipating?
So I think it's fascinating that Mark Zuckerberg talks so much about Apple on Facebook's earnings call, though I would say it's appropriate. So if you look at Tim Cook talked about how Apple thinks about new products and services, and I think about advertising that is much more protective of consumers' privacy as a natural for Apple. And that's how it's positioned itself. We care about your privacy. We're going to do more to protect your privacy than others are. So I do think that this is a huge problem for Facebook and for others in digital advertising. And this potentially presents a great market opportunity for Apple.
Tom, there was a lot of talk on the call last night regarding what potential markets Apple might want to go into? Obviously, they're not going to say, hey, we're coming out with an electric car in about 2 weeks. You better go out there and buy it and factor it into your financial models. As an analyst, do you want to see Apple get into electric car space? Do you want to see them get into AR and VR goggles? Do they offer that big market opportunity that a lot of speculators have speculated of late over the past few months?
So the natural use cases to me, when you think about combination hardware, software, and services, I think, again, it's advertising, protecting consumers while protecting consumers' privacy, lots of opportunity in healthcare. Now, I definitely think it's intriguing on cars, meaning, are we talking about the technology for autonomous driving? Are we talking about the in-car experience to the extent that Apple's your technology operating system within the car, but it's someone else's car? These are all interesting questions, but I do think that it is a needle-moving type market opportunity, and one that, in that regard, may be of interest to Apple. I, for one, as an Apple analyst, would love to see them do it.
Tom, always great to talk to you. Tom Forte, D.A. Davidson. Thanks for your perspective this morning, Tom. We'll talk to you soon.
Great. Thank you, Julie.